Welcome back to the channel, everyone, and thank you for tuning in to another great video. Let's talk about, is there a science behind day trading? Okay, the answer is absolutely no. I want to tell you today, it is purely possible to trade if you understand market structure and price action. I'm always talking about that, right, guys? But again, the only way to truly trade is to treat your trading as an art, okay? How many of you out there are painters, okay? You know, you have some artistic ability to be able to create something visually, based on your perception of it, okay? All right, you're able to just maybe look at something outside in nature itself and depict beauty from it and either draw it or paint it. That's kind of how it is when we look at, as traders, looking at the market. There's an art behind it. It's a form that, and a foundation that we must follow, okay? As the market is moving, okay, it is painting these beautiful red and green. Most of us have those, are using those colors as far as our candles on our chart, across the charts, okay? It's moving up and down, okay, in most instances, all right? Sometimes it'll move sideways in the middle range or whatever you want to call it. But it's up to us, all right? We have to be able to visually take a look at our charts. You know, you ever been to an art gallery and you are looking at different pieces of art, all right? Your perception of what you believe that piece of art looks like, okay, or what the message is behind or within that piece of artwork may be different than the next person's, okay? So it's all about perception and how we're able to read these charts. And that's what stands a lot of time in the way of most inexperienced and unsuccessful traders versus those that are profitable and consistent, is the fact that we as profitable traders are able to read the charts and know what's going on behind closed doors, all right? By simply just looking at us. Looking at the charts. Sorry about that, guys. So, and being able to read these charts, it doesn't just fall in our lap, okay? Sinks in our brain within one day. We have to spend time in front of these charts. I'm talking hours upon hours. I spend hundreds of hours daily looking at these charts, trying to figure things out before it all just clicked together. And, you know, I said this before, you must understand market structure if you want to be successful in this business. Now, some people perceptually are able to look at the market and see it maybe moving a certain way, okay? It may look bullish to them when it's really bearish, and it may be bearish to those that may, and it's really bullish. You know, so you have to grasp that piece there. You have to have a full understanding. Truly, is the market in a bearish mode or a bullish mode? All right, and that's going to help depict, you know, which direction you should trade. I'll talk about that. All right, especially, I'm gonna say this: if you're new to this channel, someone that's for the first time viewer, and you're an inexperienced trader looking to really get into the business of trading, let me tell you, the single most important thing overall in day trading, okay, is to really figure out, what is the market doing? Is it moving to the upside or to the downside? And that's where using the higher time frame charts comes into play. It allows us to really see overall what is happening within the market. So for me, I'm all about supply and demand trading, and I'm a scalper. I'm not a swing or position style trader. I have no interest in riding or allowing a trade to play out for multiple hours or days or weeks, okay? Not knocking anyone out there that trades, trades those type ways, okay? But that's just not me. I simply want to trade just a few hours a day, maybe even a half an hour. Catch 1 or 2, 3 setups, you know, sometimes it just takes one and done and be done, okay? I don't want to sit in front of these charts all day long just looking to see what's going on, all right? And so it just comes with experience, okay, guys? I know that trading can be very frustrating. And yes, it is probably the most toughest thing that any person will actually strive to really accomplish, all right? And grasp and be able to fully understand in their lifetime. Okay, it is extremely tough stuff. You know why? Because it's not ever doing the same thing every single day. The market is a living creature and it is changing its form every single day, and we as traders have to be able to understand what it's overall trying to do. I said that before. So what I want to do today is just really, I'm not going to go too much in detail. I'm just going to kind of talk about, or not really talk about, but show you when it comes to I'm talking about art, okay, when it comes to trading, I want to show you, the picture that is actually painted, okay? All right, show you the market can move one way or the other, and use live example setups within the market. Okay, for example, a trade that I took today and posted over on the Discord community. And if you're not a Discord member, please take the time. You can join for free by finding the link to the Discord down in the description portion of the video. Okay, so when it comes to me perceptually looking at the markets, to me, it's just no different than looking at a painting once again. All I'm trying to do is depict what is it really doing? What is it really telling me? What is the message that's really, being relayed, okay? So when I saw the market the last few days from, say, Wednesday, Thursday, moving into the opening of yesterday's session, I saw the market making these lower lows and lower highs, right? Okay? And then we started folding back or moving back to the upside, meaning the tide, the wave, the tide has changed, and then it starts to move back to the upside, okay? So the market can only do possibly, in most, two things, okay? Making lower lows, or I'll say this, making higher highs and higher lows, that means moving to the upside, or moving to the downside, making lower lows and lower highs. When I saw the market shifting towards the close on Friday, and it started to, transition to where it wanted to start making higher highs and higher lows, it hadn't broken any major area of structure, okay? Structure is a very important thing that you need to pay close attention to, because that's going to help you determine the overall direction in which you should possibly trade. Look at the higher time frame. Did it break structure to the upside? Did it break structure to the downside? That's going to tell you which way you need to trade. In this case here, basically after we broke this area here of 198 or say 199, let's say 200, okay? Round number. 15,200. This is on the NASDAQ 100, guys. Trading the futures. Broke to above 200 to the upside. To me, I want to start looking at bearish trades off my lower time frame charts, okay? Now, yes, we do have areas of resistance, what you would call, most people write, resistance, whatever the case is. But because I trade supply and demand, I'm looking for aggressive areas of selling and buying. So once price broke structure here at 200, it quickly and swiftly moved to the upside here into today's session, okay? Actually, once the market opened up into today's session, we had this area of supply resting right here, okay? This was a live trade that I took today, and I posted it over on our Discord community, okay? And I just said, once we broke structure here to the upside, okay, made a high, higher low, break structure to the upside, taking out structure, guess what? The moment price breaks structure to the upside and we have an aggressive area that it leaves behind where there are lots of bullish activity to the upside, that's a demand area. And then if I look above and I see we have supply resting above, I'm going to wait for price to tap into that area, because if we got a lot of bullish candles here that were created where price broke structure to the upside, leaving a nice area of demand below, I'm going to look for price to approach that area of supply, reject it, and then try to aim for the demand area below. And that's what it was all about today. That trade that I took, I posted it again over on the Discord community, and I stated why I took it. So supply to demand setup, okay? That's what I was looking for. A breaker structure above, price tap it into an area structure where there was supply at, wait for the rejection. Now, I do not take it off the 60 range chart. I'm looking to take it off my lower time frame chart, okay? So I'm going to fold down now, or move down now to a lower time frame. I missed the exact moment or entry to get into it because I wasn't, I wasn't right at my charts, okay? I stepped away, probably was grabbing some coffee or doing something. I'm not sure what I was doing, but it broke structure on the lower time frame and pulled back. So let's move down to the lower time frame, because I want to show you precisely where the entry should have been for you to execute the trade correctly. Again, I'm trying to show you the art of trading. Being able to read the charts is imperative, okay? You have to. Trading is an art form, okay? All right? You should be able to train your eyes to be able to understand the movement of the market, to be able to trade strategies and look for setups in the market, okay? So let's move down to now my lower time frame chart, in which I'll take trades from, okay? All right, so let's do that now. Okay, so this is the 12 range chart, my lower time frame, where I will be basically taking the trade from, okay? This red line right here, it basically indicates the area of supply on the higher time frame 60 range chart. You can see it here, right there, okay? All right there at 59 and a quarter to 59 and a half, which is right up here. Okay. So basically what I'm looking for is a breaker structure to the downside and then a pullback to an area of supply. Okay. So basically price out into supply on the higher time frame. I'm looking for a supply setup to form on the lower time frame to take my trade back down to an area of demand on the higher time frame. Okay. So and these are bigger moves. Okay. Bigger moves. This is not where I'm just trading specifically off my just using one time frame chart. What you see me do that a lot of times. I'll look for setups just off of maybe the 12 range chart specifically without really tapping into or focusing in on the higher time frame. And that's typically when the market is not really, moving into or getting close to moving into a higher time frame zone. But in this case here, it did, and it pushed to the downside. It broke structure right here, and then it pulls back. Now, a lot of people probably missed this entry here, and I talk about, unless you really have experience in understanding what's going on here, this is aggressive selling right here. This is a demand zone here. Did price tap right back in there to 52 and a quarter? No, it actually pulled back right here and came up to 51 and a quarter. So we're talking about 4 ticks. And I've talked about this before. 3-4 ticks, no more really than that. I'm more likely I'll take interest in taking a short, because sometimes they like to fool you and trick you to not take a trade. Pretty much they'll run the market up here, not filling in every little gap area right here or back to the zone there, and then the market will just move to the downside. And that's what they did. They tricked traders out right here. Anybody that wanted to go short right here, you got tricked out more than likely, because you're waiting for price to tap into the zone. But you can also look to trade these fair value gap areas. These are areas where there's aggressive selling to the downside, and there are gaps in between the candles, that form to the downside. So you have imbalances right there. So when price pulled back and started filling these gaps back to the upside, meaning price for trade started filling gaps in between the candles, those are fair value gaps, areas where those imbalances resting at, and the market has a possibility could reject those areas. All right. You have to understand, not all times 100% is price going to tap into a supply or demand zone immediately. At some point it will, okay? At some point it will. And at that point, it may or may not reject that area. In this case here, when it actually pulled back and tapped into that zone right there, it just blasted right through it, okay? Pushed right through it. And the key to it was you didn't even see a candle break in the opposite direction, fully closed, to take a trade going short, which would have told me the story that the market is still trying to push higher if I was waiting for price to retrace all the way back to this area right here, okay? So when I saw this, I didn't immediately take the trade. For one, I typically wait 15 minutes after the market opens up to really start taking any trades, and I wasn't in front of my charts at that time. So what I did was I was waiting, trying to find an opportunity on a pullback with the continuation of these breaks of structures to the downside. The market was not really wanting to pull back to any key area or pull right back to an area of supply. It kept pulling back to areas of imbalances or fair value gaps back to areas of supply, and not quite getting to the areas of supply and just pushing to the downside. So it retraced back, broke lower, okay, break a structure, pull back, didn't tap into an area of supply there, broke below, broke structure again, pulls back, and it kept doing that, right? And I was missing my opportunities to actually go short, okay? Because I was looking to take price back down to this area here, this demand area on the higher time frame, back to 84 and a half, all right? So by the time I got in front of my charts and price was making this move, I really only had one shot to take this trade. And as the market broke here, made a lower low here, a lower high here, and then broke structure to the downside. Let's see here. I knew that I was going to test that area of higher demand, that higher time frame demand on the higher time frame chart. So when it made this low here, it pulled back right here, okay? And then it started breaking to the downside, okay? Started rejection right here. I jumped in. I went ahead and took the trade, okay? Because I knew that, it was going to test that higher time frame demand, and I had to get in it somewhere because it was not pulling all the way back to key areas of demand. And sometimes you're going to miss opportunities like that. The market's going to move like that, because it just simply it's not going to always do what you want it to do, okay? You have to wait patiently for your setups. And people get frustrated like that because they say, when price didn't come back and hit my key area demand, it didn't hit any particular area. Sometimes it will pull back, as it did right here, pull back to this area of resistance right here, okay? And maybe if you're a support and resistance trader, you're going to take that entry right there. Oh, it pulled back to resistance, get into the trade, right? Breaks lower, pulls back, almost tapped into resistance here again. And then maybe someone, if you trade support and resistance, maybe trade again to look for the push of the market rejection to go short. I trade supply and demand. I'm looking for those for price to tap into the areas where the market is starting to make its run back at the areas of either aggressive buying or selling. So I almost missed the trade. This would have been a golden opportunity right here to take the trade, even though it did not 100% tap into the zone. We're talking like 4 ticks, okay? Typically, I'll take that opportunity right there, especially when I see rejection fully, where the candle breaks below, and even a second candle forms to the downside that's bearish. I'm taking that trade. But again, I was not looking at the market at that particular time, okay? Now, I do want to show you an area that was a low probability setup, okay? And I talk about this in the past. Sometimes price will tap back into, because people ask this question as well. They say, the market tested an area again. It filled the gap already prior to back at a zone, supply or demand zone. It tested again and retraced back to that zone again for a second time. Would you trade it? Me, 9 times out of 10, I'm not going to trade it, okay? It's really going to have to show me some significant signs of rejection. And I'm going to show you an opportunity just that happened today that unfolded that was a low probability setup because there was no gap back at the zone when it retested it for the second time, okay? All right, so, so price comes down and taps that area I talked about, 84. 80, let's say 80, 86 to 85, 84 area, okay? It taps back down to this area of demand off the higher time frame. Then it takes back off to the upside, all right? Boom, break structure back to the upside, and then it taps into another tested area up here. But look, this magenta looking area here, purple looking area, this was an area what I was talking about right here. Okay, price broke structure to the upside on the higher time frame, right? Okay, and as it did that, this is our key areas of demand resting below, right? Right here. But if you pay close attention, when price made this high here, it retraced back and started making these small little higher highs and higher lows. This is on the higher time frame chart. Back to the upside. Every time it pulled back, it filled the imbalances or gaps back to, the prior swing, okay? Pushed up, pull back, pushed up, pull back, pushed up. So it filled every area of gap back to the prior small little area of swing as it continued pushing higher to break the structure to the upside, okay? And when it did that, okay, it pushed higher and made a new high. All right, it rejected up here, okay, and then it folds to the downside, making these lower lows and lower highs. Back to the downside, okay? And when it did that and it tapped back into this key area, I can say key area because it's actually a low probability area. This was a demand zone in this area here, but price shot through that area, okay? And it tested, this small little area here as well. But this was already a tested demand area, okay? All right, and the gap had already been filled there. But look what happens, okay? When price made this structure break to the upside, okay, we got aggressive buying to the upside, makes a new high, folds back down. It didn't break any area of structure coming back down to the downside, okay? So what it did was it rejected this area. If you look at the lower time frame, which I'm going to show you, we're basically looking for a breaker structure to the upside, pull back to a key area of demand on the lower time frame, on 12 range chart for me. Looking for rejection that way to take it back to the upside. But I did not take this trade because it was a low probability setup because there was no gap or a back left at the demand zone. So it was a no-go for me, but it paid off well. So this is an example to where I've talked about in the past. Even though the gap had already been filled to the zone, okay, or within the zone, and price tested it again here because it pushed up, pulled back, pushed up, pulled back, filled the gap here, breaks higher. So there's really no gaps back at the zone. Okay, I like to see the gaps or a gap back at the zone. That tells me that there is, basically money on the table, orders that have not gotten filled. That is a possibility. The banks will try to refill or try to fill the rest of those orders, and then the market pushes back up. In this case here, it was already filled. The market retraces back to that area and it still rejected that area for the second time. All right, the market's going to do what it wants to do. You cannot dictate or determine that. People and traders get so frustrated because they always think that the market should do exactly what it should do when it gets back to an area. It's not always going to do that. That's why you have to wait on your setups using your strategy, okay? All right, and sometimes we miss trades. That's bottom line. That's the business of trading, okay? There's another one right around the corner. Don't beat yourself up because you missed a trade or you said, well, this was a great trade setup to me, even though there's no gap. I would have taken that, but I didn't take it then, okay? But my set of rules and a plan, I stick by my trading plan. If there's no gap back into the zone, it's not a high probability setup for me. I'm interested in taking high probability setups. Yes, this did pay well, paid off very well. It rejected this zone here, and it went all the way back up to the tops, to the highs right here, okay? So for me, that was a no-go. I did look at it, and I saw it happening, and I said, wow, look at that. But that's the reason why I wanted to talk about this, because so many people ask about this right here. Hey, if the market already feels a gap back at a zone, do you, take that trade again? And I've answered that in multiple occasions. I said, to me, I don't like to take retested zones. I don't trade at retested zones. I don't trade when there's not a gap back at the zone, okay? So, maybe every blue moon, but again, it's going to show me that it's just clearly a good sign of rejection. And I saw unfolding on the 12 range chart. It even had a breaker structure on the 12 range, back to the upside, pull back. I started to really take it, but I said, no, I'm going to stand down. I'm going to stick by my rules, okay? And you guys know, those that are trade and trade for a living or trade even part-time, you know that if you don't stick by your set of your plan or your set of rules, what happens? You get slapped on the hand, right? Okay? And hopefully you got the trade quick enough so you can live to see another trade. All right? So I just want to show you as well on this is the E-mini S&P 500, the ES. Again, there's no science to trading. It's purely an art form that you have to be able to read the charts visually with your eyes, see what's going on. The charts tell you what the market is trying to do, what the banks or institutions are really trying to do. So here's an example here. Price is moving to the upside. It's breaking structure to the upside, making these higher highs and higher lows. Then it turns, okay, and it breaks structure right here below 76.25 to the downside, leaving behind what? Aggressive buying to the downside, coming out of a swing at the breaking structure here, okay, or leading up to the breaking structure, pulling back or retracement. That's a key area of demand. Now, when price gets back to a key area of demand off of the higher time frame, I am typically looking for, or move down to my lower time frame to look for, did I say demand, guys? I meant supply. If I said demand, I'm sorry. Supply right here, looking for an opportunity to unfold where price breaks structure on the lower time frame and creates an area of supply on the lower time frame. And I'm looking for a retracement back to the supply area on the lower time frame to take my trade going what? Going back south. Why? Because look, after price broke structure right here, it continued. It took out this area here. Down here is an area of demand. So this is like a supply to demand setup as well. Price broke structure here, leaving this beautiful area of supply right here, pulls back. I would like to check the trade, continuation back down to the area of demand. So all you do then is just move down to your lower time frame. Again, like I just showed you last time, look for price to break structure to the downside on the lower time frame chart. Wait for it to pull back to a key area of supply, and then take your shot going short, aiming for the demand area below, down, off the higher time frame now, okay? Off the higher time frame. So the target, okay, is going to be that higher time frame demand zone, okay? When we take that trade setup off the lower time frame. It's pretty simple, okay, guys? But yeah, that's pretty much how I do it on a daily. So again, trading is an art form. You have to train your mind to be able to understand and see what's going on, okay? And I just want to share with you this scalping strategy that I use on the daily, and I've shared with the community, across the platform, on Discord, in so many videos. I cover the strategy in detail and talk about, how I use it. So, I'm just here to really want to see people become successful. I want to, hopefully inspire other individuals to kind of, cut the ties and truly become financially free. Trading has provided a livelihood and a great way for me to live. And maybe it's not for everyone out there, but those that are passionate and interested in learning how to trade. I'm not an educator or a teacher, but I just share with you my experiences and how I actually trade, just in hopes to inspire other individuals. So this is a real easy scalping strategy that you can use to purely become profitable and make money on the daily as a day trader. Simple as that, okay? So outside of that, guys, again, if you're interested in joining the Discord, find the link down in the description portion of the video. Also, please, if you are not a current subscriber, take the time now to go ahead and click on that sub button, that subscription button, and do yourself a favor. Make sure that you always receive the videos that are posted, the content, making sure that you receive it in a real-time fashion, okay? In a timely fashion. Make sure to turn on all your post notifications after you click and become a member here and subscribe to the channel. Last but not least, please take the time to do the most biggest thing and valuable thing for you, for me, for the algorithm, and for the channel. Click on that like button. I appreciate it. Please, please, please do so. I'll see everyone in the next video. And everyone that is part of the Discord community, see you tomorrow over on the trading floor. Take care and see you in the next one.